Buildings are a mirror of how we live, work and organize our society. I know because I worked in the real estate sector for many years. Yet in a time of profound technological, social and economic change across Europe, how will my industry change? New shops will change the face of our inner cities. Alternative offices will emerge as we reinvent the way we work together. Robotics, miniaturization and the Internet of Things will change manufacturing and logistics. The insides of industrial buildings are already starting to reflect this revolution. But how will this all combine to disrupt the real estate sector? Let's have a look at 4 different futures and jump ahead to 2030. In this world, real estate players are reaping the fruits of economic recovery across Europe and technological innovations in building design, construction and functionality. Flexible office spaces with advanced digital capabilities are enabling a new service economy. Shops have become smaller, but are yielding higher revenues per square metre in view of increasing client expectations about shopping experiences. Manufacturing and logistics facilities have become multi-tenant capable thanks to data integration and automatization. While manufacturing areas are shrinking, logistics space is growing with additional small-scale distribution centres in urban areas. Labour is being gradually replaced by machines, which boosts productivity but at the same time poses urgent social and political questions. Necessary upgrades and R&D investments are costly yet attractive. In the end, it is these investments that are saving established players in real estate from stagnation and protecting them from new market entrants. Consider by contrast a world in which real estate has lost its shine due to poor market attractiveness and insufficient returns. Innovations and investment focus on high-tech building systems and automated facility services. Technology-based business models are now standard across Europe. This automation of facility services has changed the nature of the real estate business. What once were principally asset investments have become mass consumer products. Investors are looking for compatibility, standardization, and high utilization factors. Infrastructure and technology have become more important than location. The layout of the majority of buildings focuses on functionality and cost. Tech companies prosper in this new low-cost environment and enter the established real estate sector. Encouraged by automatization and cost pressure, our landscape is turning into a grey, 3D printed desert. Let's look at another scenario. Long-term economic stimulus by the European Central Bank did not have a positive effect on the industry. Compared to other assets, commercial real estate has lost its appeal due to risky yields and declining total return. Digital disruption has taken place in several industries, but has proved to be overestimated for the general real estate industry. Over recent years, rents have declined and investments have been withdrawn, leading to a maintenance backlog in our cities. Consequently, this has led to lower efficiency and profitability. Yet despite this, commercial property is still in demand. Incremental innovations may have changed the way we interact, but did not replace in-person meetings or the requirement for traditional shops. The conversion of existing assets is giving a facelift to run-down neighborhoods, where startups and new businesses are emerging in old properties at moderate rents. In this world, the real estate industry has missed the chance to reinvent itself, as change was not deemed necessary due to high market attractiveness in the short term. established players missed the chance to pursue technological innovations or develop new business models. As a result, the long-term attractiveness and market share of usual services have declined, unlike alternative asset investments. New prop-tech players are entering the attractive market and quickly gaining substantial market shares by leveraging the superior efficiency of their assets. Investors and clients will need to get used to some new faces. These four scenarios show how differently the future of the real estate sector could play out. The one common theme is this: the industry will face disruption. The only real question is when, and through what factors this change will happen. Strategic foresight will distinguish the winners from the losers.